Greetings. In this section we are going to cover question 7 from DBE 2022, that is Maths paper 1, and this question is based on finance, growth and decay. Now under this topic I have listed 6 formulae that we need to be familiar with, that we are going to use in answering some of these questions. So we have got the first question. The first formula is simple interest. The formula is given as A equals P into 1 plus I times N. Simple decay, compound interest, reducing balance, future value, and present value. At this stage, I believe that you are familiar with this formula and you know what each of these variables stand for. Okay, the X, the I, the N, the I, the A, and the P. Okay, so for example, A in simple interest stands for the accumulated amount, P is the principal value, I is the interest rate, and N is the number of times interest is calculated. Now let's get into question, that is question 7.1. 7.1, it is stated as follows: how many years will it take for an investment to double in value if it earns interest at a rate of 8.5% per annum compounded quarterly? So compounded quarterly, it means that we are going to use compound interest. So the formula that we are going to use is compound interest. So the compound interest formula is A equals P into 1 plus I to the power N. Now the challenge that we have here is we are not given the A and the P. So now what we have to do is to work this one algebraically, meaning that we are not given the final amount and we are not given the initial. So I'm going to let my initial be X, any amount X, and then if my principal amount is X, then if it doubles, so we are multiplying that X by 2, so the final amount will be 2X. So this will multiply, the X will multiply 1 plus I. The interest is 8.5 per annum. So change that one to a percentage. It will be 0.085. And because we are compounding quarterly, which means we are calculating interest after a quarter. So it means this interest that we are given here is per annum, which means per year. So we need to use to get the quarterly interest rate. So the quarterly interest rate is, we are going to divide this by 4. Okay, and then we raise it to the power N. The question is asking us to find how many years. How many years? So if I take N as the number of years, our calculation is based on quarterly rate. So now our N must be multiplied by 4 to find how many quarters are in those N years. Okay, so when we simplify this, we are going to get 2X equals X into 1 plus, okay, I will leave that one 0.085 over 4 to the power 4n. Now what we have to do here, we want to solve for n now. We can divide by x, so the x will cancel out. So we are going to get a 2 is equal to, now what we can do is we can evaluate this number here, 1 plus 0.085 over 4, take it as one number because this is our base, we raise it to the power 4n. So when we take that one, I'm going to add 1 plus 0.085 and over 4 to get a simple answer, single answer. I'll get 1 plus, our answer is 817 over 800. I would express that one as a decimal, which is 1 comma 02125, and this is raised to the power 4n. Now to find 4n, we have to use logarithms. That is, our 4n will be equal to the logarithm of this number 2, okay, and our base is going to be 1 comma 02125. Let's see, find the value of n here. Log of the number 2, I'll put in the base 1.02125, and the logarithm of the number 2, that is giving me 32.96404986. Then we are going to divide by 4. So we divide that by 4. We'll get 8.24. So n is equal to 8.24. Yes. Okay. One other way that you can use also, if you don't want to use this algebra part, is just to take any general number. We have the formula here. A is equal to P1 plus I to the power n. So what you can do, they are saying that how many years will it take for an investment to double in value if it earns interest at a rate of 8.5% per annum. Okay, so if you can't get to this algebra part of using x or any variable that you can use real numbers. You can use values, exact values. Like if my final amount is 10,000, I'm just gonna use 10,000 or 1,000, which means my principal amount will be 500. So take any value. You can take 3 here, then here you get 1.5, or if you take 100 here you get 50. Any value that you can pick, okay, into 1 plus interest is 0.085 over 4 to the power 4 times n. Okay, 4n is the number of quarters. So you'll find that when you divide by that amount, 500, divide by 500, you will basically come to the same equation, which is 2 will be equal to 1 plus 0.085 over 4 to the power 4n, which will give you 2 is equal to 1.02125 to the power 4n. So what I'm trying to say here is that when you are given this type of question, you don't necessarily have to use x and 2x. So you can take any absolute values, like 500. I've used the 500 here, any value, or you can take 20 rand. If you input in 20 rand, here it will be 40 rand, because it's going to double. So take any value, still your equation would simplify to the same value. Okay, so this and that will be the same, then you are able to proceed to find your 4n, which will give you 8.25. The second question is 7.2, which reads as follows: a company purchased machinery for 500,000 rand. After 5 years, the machinery was sold for 180,000 and the new machinery was bought. calculate the rate of depreciation of the old machinery over the 5 years using the reducing balance method. So we are given the clue here. We are going to use the reducing balance method. So the reducing balance method is what we have listed here. So we'll use that one. So 7.2.1, our formula is going to be A is equal to P1 minus I to the power N. So we are given a machinery here that was 500,000. After 5 years, it depreciated to 180,000. So 180,000 is our A value, which is the final amount. So we have here 180,000 will be equal to principal amount is the starting value, the initial amount. It was 500,000. So put in 500,000 here into 1 minus I. The interest is what we are calculating, okay, the rate of depreciation, assuming that it is most of the depreciations they are every year. So our interest is going to be per annum. So we are calculating I, and since we have 5 years over which it is depreciated, so our depreciation is going to be compounded 5 times. So that will be to the power 5. Okay, we have substituted the values in here. Then what we'll do is to divide. So when we divide by 500,000 by 500,000, so we'll get here 180000 divided by 500,000. Okay, we'll get 9/25. Let's try to put it in a decimal. That is 0.36. So I'll get here 0.36 will be equal to, we have divided by 500. Okay, so this goes, and we have divided here by 500,000. So this simplifies to that. So we are left with a 1 minus I, that to the power 5. Okay, now we want to access the 5, but the 5 is raised to we want to access the I, the interest, but the interest is raised to the power 5. So we are going to eliminate the power 5 by finding the fifth root. So I'm going to have the fifth root of 0.36. That will give us a 1 minus I to the power 1, because the 5 is now gone here. Okay, so actually we can remove the brackets here, but there's no need of writing the brackets. The 5 is gone. Now we are going to find the fifth root of 0.36. So fifth root of 0.36 is that. .815193, that is equal to 1 minus I. And then we want our I, so subtract 1. So I'm going to have this number, subtract 1, which will give me a negative I there, will be equal to that number. So on my screen, on that screen, I'm going to subtract a 1, and then I'll get that value there, negative 0.18480688904. Remember, in financial calculations, you are not allowed to round off your calculations. You can only round off the final answer. Okay, so always keep on writing the full value of your calculations. So my number is this. So I'll write it down, but anyway, that is the last number. So we have a negative 0.184 8068,904. 8068,904. Now dividing by a negative, I will get my I equals that 0.18480, and so on and so on. Now here we are going to have this number that we get in our formula, the I, the value that we put in the I in the formula is not in percentage form, which means it's a number that has been divided by 100. So if we want to get our rate, our interest rate, so therefore our interest rate is going to be this value here multiplied by 100, and that will give us 18.48%, which will give us the final answer. Now let's come to 7.2, question 7.22. It reads as follows. The rate of inflation for the cost of the new machinery is 6.3% per annum over the 5 years. What will be the new machinery cost at the end of the 5 years? So here we bought a machine for 500,000, and after 5 years it depreciates, it loses value, and it is now 180,000. So 7.2 says when we bought the machinery, okay, the cost of the machinery did not stay the same. So there was an increase in the price. Because of the rate of inflation for the cost of the new machinery, the rate of inflation is 6.3. So it means the cost is rising every year over the 5 years. So 5 years from the time that we purchase it, what will be the new machinery cost at the end of those 5 years? So you realize here the formula that we are using is compound interest. Okay, the compound interest is the formula that we have listed above, which is A is equal to P1 plus I to the power N. So meaning that we have got a principal amount which is 500,000, which is going to accrue interest over the 5 years. Okay, so our 500,000 is going to multiply 1 plus I is the interest rate, which is 6.3%. We can write that as 0.063. Okay, it is inflation rate is per year, every year. So we leave that one once a year and we raise that to the power 5. Then we evaluate the price, enter the value here. We'll get 678,635 rand and 11 cents. So that will be the cost, which is roughly, which you can write as 678,635 rand 11 cents. Then we come to 7.2.3. The company set up a sinking fund and made the first payment into this fund on the day the old machinery was bought. The last payment was made 3 months before the machinery was purchased at the end of the 5 years. The interest earned on the sinking fund was 10.25% per annum, compounded monthly. Okay, I've highlighted some important points here. Here we are compounding it monthly, so interest is calculated monthly. The money from the sinking fund and the 180,000 from the sale of the old machinery was used to purchase for the new machinery. So what we note here is that the new machinery is now costing this much. Okay, so we want to buy the new machinery at 678,635 rand 11 cents, because due to inflation the price has gone up, the cost has gone up. Now we need to set up a sinking fund. A sinking fund is a savings account which is set up in order to save money to replace an item in the future. So what we have here is that we have bought a machinery for 500,000, but 5 years from now, that machinery will be costing us 678,000. However, when we sell that machinery, we are going to recover 180,000 rand. So what we are going to do is we are going to set up a savings account. We will start saving some money now, so that 5 years from now we'll be able to take the money from that account and add it to the book value of that machinery and buy the new machinery. So what we need from this question is that we need, first of all, how much money do we need to save? Okay, how much money are we targeting for our savings account? Okay. So what we need to do is first to look at the difference. So our sinking fund, for our sinking fund, we are going to take the difference between this amount 678,635.1136 and subtract 180,000. We will get 498,635. So get 498,635.1136. So which means this is the amount that we need to save in our sinking fund. We will save 498,000. 5 years from now, it will have accrued to this. Then we are going to sell our machinery at 180,000, and then the total will be able to buy the machinery at 678,000. So what we have here is we need to raise an amount of 498,635 rand 11 cents in our account. Now here the question is asking us to calculate the monthly payment into the sinking fund. So a sinking fund is a savings account. So for us to calculate here, we need to use the future value. So we're going to use the future value formula, which is x multiplying 1 plus I to the power n minus 1 over I. Now the future value here is the amount that we are going to save. So we need to save 498,635. So that is our initial amount, 498,635. 98,635.1136. And X is what we are looking for here, the monthly payment. So we don't know the monthly payment. Okay, we multiply by 1 plus I. Our interest is given as 10.25, which is 0.1025. Because we are paying monthly and interest is compounded monthly, we divide that by 12 and to the power n. Our n is going to be 58. I'm going to explain that one. Minus 1 and then over I, which is 0.1025 over 12. Now, what is happening here is, in a normal sinking fund calculation, the first payment is made 1 month after the purchase of the vehicle. Let me write that down. NB, in a normal sinking fund calculation, so what we are saying here is that when you are working with the sinking fund calculations, the normal thing is that we assume that, especially when you are using this formula, the future value formula, our payment, our first payment, our installment of our saving should be 1 month after the purchase of the item. But now here, when you look at what happened, the company set up a sinking fund and made the first payment into this fund on the day the old machinery was bought. So this one was not done at the end of the month, 1 month after. So it was made on the day, on the first day. Now, what effect this one is that it is going to add our total installments by 1. Now here we have got a 5 years. We want to set up a sinking fund for 5 years. Now if we've got 5 years and we are paying monthly, so that is 5 times 12, we are going to have 60 payments, which means 60 months. But because we made the payment on the day the machine was made, so we are going to end up having 60 payments plus 1 payment, which is 61 payments. Now, when you read further here, it says that the last payment was made 3 months before the new machinery was purchased at the end of the 5 years. So now, what that is statement now means that in 5 years we could have made 61 payments, but we didn't pay for 61. We didn't make 61 payments. We made 58 payments. That's why I put 58 here. 58 payments plus the 3 payments that we didn't pay regularly. Okay, so which means our total installments were 58. We made 58 payments. However, when we made 58 payments, there was a lump sum amount that was in the savings account. So it means that on the last 3 months, if I were to draw a timeline here, so this is 61, 60, 59, and 58. So now we stopped paying at installment number 58. So it means that our amount had to stay in the sinking fund for 3 months. So what we are going to do here is to take this amount that we have here and compound it for the next 3 months. So at 58, these are the total number of installments that we made. So we now multiply that, we raise that to the power 3. So as a result, we are going to have this formula, the complete formula as follows: 498,635.1136 should be equal to x1 plus 0.0, or it's a 1025 over 12 to the power 58. So we made 58 payments, and then minus 1 here over I. Our I is again 0.1025 over 12. But we are saying after having paid 58 payments, our amount had to accrue an interest over the remaining 3 months. So we are going to multiply that by a compound interest of 1 plus, the interest is still the same, 0.1025 over 12 to the power 3. So it means 58 payments and then accrued interest over 3 months, then that will give us the sum of money that we'll get at the end of that we need to purchase the vehicle. So to solve this one out, what I'm going to do, I'm going to take all this here as one value. Okay, work that one out as one value, which is multiplied by x. So I will have here 498,635.1136 will be equal to the value that I get here multiplied by x. So x multiplied by that value. So we are going to enter that value in our calculator. Let's enter it. So I'll start by that, which is okay. So that value, we are going to multiply it by the compound formula here, which is 1 plus 0.1025 over 12 again, okay, into that, then raised to the power 3. The answer I get is 76.59097801. So this value is multiplying x. To get x, I have to divide by that value, divide by that one. So I'm going to get here x is equal to this value, 498,635.1136 divided by that value, 76.59097801. Okay, our answer will give us the installment. So I'm going to take 498,635.1136 divided by the previous answer that we got. So take that one. Okay, I'll get 6,510 rand 36. So therefore the monthly installment is 6,510 rand 36 cents, which gives us the final answer to that question. Okay, I hope you enjoyed this section and you grasp some major concept in it. Thank you for watching. Don't forget to give your comments, and also please like and share the video with the fellows, and also please remember to subscribe.